There's a bullish call out on PayPal today. The stock got upgraded to buy at Bank of America. They expect activist investor Elliott Management to push for more cost cuts. We've made it our call of the day. Amy Raskin, I feel like this stock, man, I feel like it's gone from loved to loathed. Nobody here owns it today, and the valuations come way down. I mean, the analyst who made this call was on, I think it was Tech Check before us, pointed out the stock is now trading at a 12% premium to the overall market. It has been at 75% at times. That gives you an idea of how the multiple has come way down. Why not attractive now?
You know, we've never really loved the fintech sector. Actually, we've never really been there. You know, my view very much is that the credit card business is very much a duopoly, and that consumers don't really want to pay. So people don't really like fees associated with payments. So they expect it to be free. There's a lot of competition in the space. There was a lot of capital that was put into this space. So we just don't see the longer term profitability opportunities there. So we're not there, and we've honestly never been there. So we missed the ride up, and we're missing the ride down.
I know you own Visa, as do you,
yeah.
Shannon. And it's the same question, really. If not now, when?
Well, Scott, we actually owned PayPal last year, and we only owned it for about 6 months, which for us is a really short holding period. We were looking at, you know, we had lost about almost 20% on the stock already when we sold it last year. It's down another 55% since we bought it, or since we sold it, excuse me. And I think the problem is you're seeing slower growth rates. And I do think that there's an opportunity for additional monetization for PayPal, but I think they have to get their costs right in terms of the average revenue per user that they're generating versus cost spend. And so I think that this upgrade, although it might be a little bit too early for us to go back into the space because we do think the payment space, to Amy's point, is incredibly competitive, you're starting to see the stock down to a valuation where if you can bring costs in and you can start to focus on that revenue per user rather than net ads, this could be an opportunity in the next couple of years.
Jimmy, you're emblematic of love to loathe, right? You owned it. Now you don't. You own Visa instead. Why?
Maybe I'll go love to neutral. I mean, because I honestly don't hate it, but I think the problem and why I'm neutral is I really don't know what I'm rooting for in PayPal. This was a stock, as you pointed out and the analyst pointed out, that was trading at a 50 times multiple. Now it's at a 20 times multiple. Is it cheap enough? Maybe. But what if we're actually getting a turnover from growth investors, which it was, to value investors that are reflecting the change in strategy that management went through a year ago, where it went from growth at any cost to quality growth. I think you've got a long time in the penalty box as that shareholder turnover turns over. In the meantime, I know what I've got in Visa. I know what I'm rooting for there. I'm rooting for a pickup, a continuing pickup in international travel, which increases their cross-border transactions. That's their growth area, and I see it continuing.
Potentially something has changed here at PayPal. Maybe it's on the encouragement of Elliott Management, but the new CFO, Blake Jorgensen, is someone who was at Electronic Arts and utilized buybacks aggressively when he came to the Electronic Arts in 2012, through 2013, through 2014. It worked. He's going to use the same strategy here. PayPal has already announced a $15 billion addition to the 2022 current authorization that has $2.8 billion left on it. Let's remember that this is a company that in the last 3 years has only bought back $9 billion worth of their stock. So new CFO that's going to prioritize a buyback strategy. If you are going to own this name, the reason to do so is solely predicated on the belief that they're going to return capital to shareholders.